That is an ugly ass 9. So, and that's an ugly ass arrow. What the fuck? All right, what's going on, y'all? Welcome to Average Money Works. To this video. All right, what's going on, y'all? Welcome to Average Money Works. All right, what's going on, y'all? Welcome to Average Money Works. This video right here, I just want to go over a couple reasons why I think everybody should be invested in the stock market. So, if you wanted to get invested in the stock market but you don't know how, kind of like my last video, like I was saying, or you just don't understand the stock market too well, or you just want to know a little bit more information on why you should invest and what investing can do for you, definitely stick around for this video. I'm gonna put the breakdown like I did in the last video on here. So this is just how I see the stock market. This is my own opinions. If you have other opinions on the stock market, please leave a comment down below so we can talk about it. And you can give me some information that maybe I don't know. So let's just go ahead and get started. So the first reason why I think everybody should get invested in the stock market is because you get a better return than leaving it in your savings account. So in your savings account, personal savings account, right? The average return per year is about 0.06%. So if you have $1,000 in there, you're not even making 1%. So you're not even making $10. You're making like way less than $10. I don't even know what the math is, but you already know it's not $10. So you need to have $1,000 in your bank account to not even make $10. You put that in the stock market, invest, let's say you invest in the SPY, which is basically like an ETF, an exchange traded fund. So it's like its own stock portfolio of 500 companies. So the SPY grows around 9%. That is an ugly ass 9. So, and that's an ugly ass arrow. So first of all, let me make my green arrow. All right. So this thing grows about 9% every year. So if you have $1,000 in your bank account, at the end of the year, you're going to have about $1,090 versus in a savings account, not even 1,010. All right. And let's say you start out with $1,000 in your savings account. Are you going to leave your savings account there and not put another dollar into it? Or do you have a certain amount of money that you're adding to your savings account every paycheck? And if you don't, I don't know why you don't, because this is your emergency fund money. You know what I'm saying? This is your vacation money if you want to go on vacation, which kind of leads me to my second point. Um, you can use the stock market to grow an emergency fund a lot faster. So let's say you only have $25 to spend, or let's say you only have $25 to put in a savings account every paycheck. So that's about $50 a month times 12. I don't know what the fuck that shit is. Times 12, that's $600 a year that you're adding without even thinking about it. You just, well, as soon as you get your paycheck, $25, boom, savings account. Or in this case, as soon as you get your paycheck, boom, $25, Robinhood account, brokerage account, TD Ameritrade, whatever you got, $25, you just deposit it like a bill and you just throw it in there. So every paycheck, or you can just wait for every month and you just take it every month, you add it to your savings account or you add it to your brokerage account. What you know is if you put it in investing, you're making around 9%. And if you want to get even more into it and you want to have better control of where your money's at, and you don't want it to just sit there and collect this average of 9%, you can start investing into stocks like Apple, like Disney, like Starbucks, like General Mills, Hershey. They got their own too. You can invest in Uber, Lyft, Snapchat, Twitter. Pinterest has their own, Spotify has their own. Anything that you're into, you probably listen to Spotify every single day. And you can start making money from Spotify just by doing this. And then that kind of brings me to my third point. Invest in companies that you're already invested in. So you know how much money you're making from leaving in a savings account. You know how much you're making if you put it in just a regular ETF and you don't touch it for a year. You just add to it. So if you don't have that much time to invest and really pay attention to the stock market, you just throw it in there like a savings account and it grows. But if you want to pay more attention, you want to see where your money's going, when it's coming out, how much you're making, how much you could potentially make. You want to buy more shares as time progresses, investing in companies that you already are invested in. So let's say you have, an Apple Watch, you're an Apple guy, right? So you have an Apple Watch, you got a MacBook, right? You got AirPods, you got the whole nine. You're like Mr. Apple, right? This alone, you probably spent way more than $2,000. I'm just gonna assume that you spent about $2,000 on all that. You got an Apple phone, Apple Watch, MacBook, AirPods. You spent $2,000 on Apple. You invested in Apple. Now you're walking around and somebody's asking you what phone you got. You're doing free advertising for Apple. You're advertising Apple for them. And if that guy goes and buys an Apple iPhone, how much money are you getting from that sale? You're not getting a single penny, not a single dollar. So if you want to know why you should invest, here's why. If you own one share of Apple, let's say you just own one share, okay? You're now part owner of Apple. So you're a part of the company now. So when Apple has good earnings, if they come out with like a new watch, a new MacBook, if they have a press release and they got a whole new lineup of stuff coming out, people want to get into Apple. They want to be a part of it. They want to invest. So the share price of Apple goes up, and because you own a share, your share goes up. So now you've made money off of Apple because they're doing good. And that's why investing is such a great idea, because now you're investing in Apple in two different ways. You know, not only are you investing, but you're also a part of the company and you're growing with the company. And Apple's just like a really easy company to use as an explanation. It could be anything like, if you have Under Armour, you like wear Under Armour, you go to Starbucks every day. You're going to Starbucks and you're getting this new drink, and then somebody's asking you what you got in your cup, and you tell them what it is. They're going to go to Starbucks and get that. And now Starbucks is making all this money because people want to come get their stuff that you showed them, and you're not making any money from it. Now that you're invested in Starbucks company in the stock exchange, you're making money from Starbucks doing good. So that's a really big reason why I love getting into stock market, because I'm invested in companies that I'm actually invested in already. Now I'm making money from it. And when you're doing it like this, you pay more attention to what your money's doing. You can see how much money you're making. And there's a whole bunch of different ways how you can increase your rate of return. I'm going to get into that in another video, but for this video, just kind of going over why I think you should invest. These are the three main reasons why you should invest. And if you want a fourth reason, just to break it down for you, like I said with the savings account and the emergency fund, you also can treat it like another 401k or, early retirement account. Now, let me ask you this question after I write this whole word down right quick in my sloppy handwriting. Let me scroll this up. Let me ask you this question. Do you know when you're going to retire? And most of the people are going to say, no, I don't. I'm not thinking about retirement. But everybody knows that the retirement age is somewhere between 55 and 65 years old. All right. I'm 29. I'm going to assume, well, I'm not going to assume. I'm just going to put a random number out there. Let's say that the average person watching this video or is thinking about investing in the stock market is 30 years old. All right. If you're 30, you're still going to be working for another 25 plus years. All right. That's a very long time. And if you're just working your 9 to 5, you're not putting any money anywhere else except your regular old savings. You're just paying your bills. Everything's staying the same. Yeah, you'll retire at this. You'll retire at 55, 65, and you'll just have your regular 401k as income. I don't know how much money you're putting in there, but it could be pretty good. But how would you like to have another way of getting paid, another source of income, and you can retire earlier because now you have two sources of income? If you invest in the stock market, I don't even know why I'm running 5 here. Now you have basically two 401ks, and you're contributing to both. Or let's say you're not really thinking about early retirement. You have kids, you want to put them through college, but you just all the money that you're making, if you work any overtime, that's the money that's getting added to it. This right here can be another college fund for your kids. And just like I showed you all the way at the top here, this rate of return on average, if you just leave it there and don't touch it, if you just keep investing in that, your average rate of return is going to be 9%. And I can prove that by going to, I don't know why I'm on Pinterest. If I go to the SPY, Come on, bro. Go to the SPY. Let me show you something real quick. Right here's the SPY. If I go over the last 5 years, 72% over the last 5 years. Over the last year, 15%. So this year it actually is higher than 9% over the last 3 months. So let's just go by year. Your account will grow by 15% if you invested in the SPY last year. So if you put $1,000 in there and you increase it by 15%, you made 150 bucks for doing absolutely nothing. You know what I'm saying? You could take that $150 out and go buy yourself something nice. You know what I'm saying? Or you could take that 150 and reinvest it on top of whatever other money you're putting in there. Let's say it increases by 15% again. Bam. And let's look at this 72.9%. Let's say you put $1,000 in and you leave it in there for 5 years and it does this again and it goes up 72%. You made $720 in 5 years for not doing a single thing. So investing in the stock market is just amazing. And I wish I would have got in sooner, but it's never too late. And this is why right here, this 25 plus years, you can cut this years down. Just look at it like this. You have a car payment, car note, right? And you're like, okay, I have a 5 year loan that I have on it. So you're already like, all right, the next 5 years, I'm paying off my car. If you work overtime, you make like extra $100, an extra 150 bucks. This is your logic. I'm gonna put this into my car loan so I can pay my car off faster, and then I don't have to worry about paying for my car. But what if you have that same logic in retiring? You're planning to retire in 25 years. You keep adding money to your 401k if you have an IRA account, which is another like investing account, or you just put it in a personal brokerage account where you control everything and you can take money out. I'm just gonna do that because I don't think my handwriting is doing me any justice. All right. So, anyways, if you treat it like that, like your car payment, and you're putting money in your account every so often, your retirement years is gonna come down too. And that's probably the best way that I can explain it. Treat your retirement like your car payment. You're going to retire when you're 65, whatever age you're at. Let's say you're at 37. 65 minus 37. Right now, you're not going to retire for another 28 years. You start saving now and doing all this, you're knocking years off of that as you add to it. And that's, to me, I don't want to be working until I'm 65. I know that for a fact. Not even 55. I'm trying to retire before I'm 50. You know what I'm saying? And to me, this is probably the best way that I'm going to get there because of the money that can be made in the stock market. If you add a beneficiary to your account, I don't even know if I'm going to spell this right. You add a beneficiary, so let's say you have like a grandchild that you want to give it to your grandson. When you pass, your account is going to get transferred to them. So you're setting up the next generation for success and in a better position than you started with. That's one of the reasons why I'm doing this, because I want the next generation to be in a better position than I was, because I don't want this cycle to continue. I want my cycle to be broken. Being able to understand that you can make your own money and be your own boss and work your own hours and do it how you want to do it. People had to move to the US at some point. Somebody somewhere decided that they didn't want to live where they're at anymore, and they want to better their life, and they want a better life for their kids and their grandkids and their great grandkids. So they moved to the United States to do that. And they took a huge risk by doing that, but they had the future in mind. And this right here is the same thing. I got my kids in mind, my grandkids in mind, my nieces and nephews in my mind. When I go, I want them to be set in a way better financial situation than I was put in and where I'm at right now. And that's what the stock market does, man. I'm telling you, this is one of the greatest things to be out there to start building wealth, generational wealth. Generational wealth, baby. That's where it's at. Create wealth for yourself, retire early. When it's time to go, your grandkids can do whatever they want. They can continue this, and it's a recipe for success. So that's the stock market for me. If you guys have any more questions on anything, you want to know any more information, Please leave a comment down below. Let me know what you guys think. Let me know if you guys have any of your own suggestions or opinions on the stock market. I'd love to hear it. I love talking about the stock market and financing. So anybody that wants to talk about it, hit me up. Make sure you guys are subscribed to the channel. We got more videos coming out, more tutorials. Make sure you guys stay tuned, and I'll talk to y'all in the next video. Peace.